well, you only have to look at retail. That's where all the action is while everybody's at the beach here. I mean, these retail stocks are moving on average 10 to 20 percentage points. And if I had to title this retail earnings season, I would call it trading places. All of the out-of-favor names, Macy's, Nordstrom, Kohl's, all rallied on less bad. I'm not saying that's good. It's just less bad. But the good news was inventories across the board, whether you're looking at today's Foot Locker or you're looking at Walmart or you're looking at Kohl's or Nordstrom, inventories are incredibly healthy as we head into holiday season, and that sent these stocks much higher.
I mean, it's been a couple of quarters where the narrative on retail, Mike, in general, has just been so negative. Maybe except for the guys like Home Depot. So, well, what's happening now?
I think stabilization generally, but I think, as Stacey said, it's really about the inventories have gotten more rational. The top lines are not really growing that fast. I mean, even if you look at the companies that have kind of outperformed expectations, it's not necessarily as if they have great momentum on the top line. It's just things are less worse. And also, there's some individual stories within retail that make a lot of sense, whether it is home improvement or the lower end consumer that's kind of doing okay. Those things make some sense to me. And then you have, for example, Restoration Hardware today, up more than 10% on the Goldman Sachs upgrade. This is a stock with a 25% short interest.
Wow.
And on a summer Friday, you get an upgrade and it flies 10% because maybe the holiday season will be better.
Exactly.
Weird. I'm not trying to talk Stacey's sector down. It's a weird sector because you have these tremendous secular forces that are basically destroying the entire sector. There'll be a few winners, but investors still like to play in these things. It's a weird thing. It's almost, I wouldn't say it's like the home builders because home building is even a tinier sector, but you have huge forces going on with the likes of Walmart and Amazon. And so what happens with the Restoration Hardware or a Children's Place? In the scheme of things, they're small and mid-cap stocks at best.
But what's interesting, Stacey, about retail is people often will kind of start there when they're looking at names because you can do channel checks, you can, hire a satellite to count traffic in the parking lot. I mean, there's a lot of ways to kind of keep tabs on how they're doing. But to Evan's point, there have been a lot of challenges here. So are we getting a sense that people are the ones that are winning are kind of working through those and embracing some new hybrid online, real estate future?
Yeah, well, what's really interesting about this earnings season is the winners, the long-term winners like a TJX, they reported really good numbers. But the thing is, the stocks just sort of fizzled because they've been in favor for so long. And the ones that are out of favor with huge short interest are the ones that are reacting positively here. But yes, we've seen, the transition to online, which comes with a lower operating margin. And I would also argue that a lot of these retailers, really even including Macy's, that are talking about omni-channel all the time, in a lot of cases aren't really omni-channel. A great example is Bloomingdale's right now is doing free shipping over $150 online. If you go to the store and want your stuff shipped to your house, they're going to charge you. So to me, that's not really omni-channel, and that annoys the consumer. So there are things to be fixed as we head into holiday.
Which is, in a way, an optimistic note if they can get it right. Larry, quick last word to you before we let you go. We've hit on a number of the risks here, but where do you think the best opportunities are in the market right now?
I think the small banks, as we head toward next year, you could get a steepening of that yield curve. And the small banks with a Trump presidency or with a Hillary presidency, you get a good chance, especially with the Trump presidency, you get a very good chance of small banks finally getting a better seat at the table. But that steeper yield curve is going to really help the small banks versus the big banks. And they've dramatically underperformed the big banks. So I think the small banks, you can nibble in here. You're going to get a better buying opportunity later in the over the next 6 months. But I think small banks over the big banks over the next 12 months.